What's up, everyone? Welcome back to the channel, More Than Mortgage. I'm Chad Anderson. That guy is Zach Jones. This is a good one today. You're going to like it because all this NAR stuff and commissions and what was it, Zach? August 17th, I think was
Something like
D-Day
that.
in the real estate world. Yeah.
Yeah.
So, that's when the gloomy clouds came and lightning struck and Zeus was pissed and bolts were flying everywhere. That's when it happened about a month ago, a little less than a month ago. And so it's been all these, how do we do this? How do I get paid? Should I only be a listing agent? Well, if you're a buyer, now the question becomes, did my down payment just go up in the sense of maybe not down payment specifically, but did my cash to close go up? Now, do I have to come out of pocket more money in order to get a home and to go through a transaction? Like, did this just all of a sudden bump me out of the picture? Well, it's going to depend. I've always said in a seller's market, it's going to cause some problems. In a buyer's
Mhm.
market, it's really not going to cause that many problems. But if you have to pay for your realtor's representation, for your buyer's agent, we want to kind of walk you through that and then go off on one or two spinoffs or tangents from that to kind of explain how you can do it, but then also some potential consequences if you do it that way and approach it from that angle. So, Zach, this is going to be a good one, but it's a big concern for a lot of people because they're worried about how much cash do you really have to bring to the table at this point.
Right. And there's been so much hype about the changes in the compensation rules for realtors and so many fearful responses from agents that I think that the very best thing that we can do at the beginning of this discussion is to shelve that fear for a minute, because there's some very simple solutions if we can kind of
Very.
get that emotional response out of the way.
Yeah. So here's how it works. You want to let's go with $400,000. That seems to be a fair,
Sure.
like average price
Yeah.
point, simple math, round numbers. We don't want to overcomplicate things today. So $400,000. Okay. Let's pretend you're doing conventional loan. We'll say 5% down. All right. Now, keep in mind, I always hate it when we do these scenarios because people think, oh, I have to do 5% down to get a house. No, we have 0% down programs. We have 3% down. We have 3.5%. We're just using this as a standard conventional example to walk you through the exercise. So 5% down on 400,000, that's $20,000. Zach, estimated closing costs on that, if you're paying one discount point, I want to go 14, 15,000,
Yep.
somewhere in there by the time you tally everything up. It's going to depend a little bit here or there, but let's just say 15,000, err on the
Yep.
high side. 20,000 plus 15,000. Easy math, 35,000. They're in different buckets, okay? I try to explain to all customers, your down payment bucket, that has to come from you or an eligible gift from a family member. That cannot come from the seller at all. Next bucket, closing costs. That can be negotiated. You can pay it, seller can pay it, or a combination thereof. Third bucket now is if you have a situation where the buyer's agent is not going to be compensated by the seller. But the buyer's agent says, hey, you still owe me some money because that was our agreement. So, Zach, walk them through how that next bucket could potentially work on a $400,000 loan and how you can potentially get away with not having to come out of pocket for that amount.
So let's put a number to the bucket. If we go by, traditional historical norms, not that there's any fixed commission rates, but traditional historical norms is
Is that a
3%.
three balloon on your shelf back there? Is
Yeah,
that a
that's right. That's right. I got a big three back here. So the 3% commission to an agent on a $400,000 loan means that basically the buyer's agent, the agent that is bringing the buyer to the transaction, is looking to get a $12,000 commission on that on the work that they do on that transaction. So
Yep.
you got so now you've got this $20,000 bucket. You've got a $15,000 closing cost bucket, 20,000 down payment, $15,000 closing costs, and then a $12,000 commission bucket.
Yep.
Now, what we're going to propose to you is that all of this can be handled within the context of the negotiation with the seller, but you're going to have to make some movements in the actual offer price on the home. So if you've got this house, $400,000, if you want to get the seller, and see, we're mixing metaphors here a little bit, Chad, because I always tell people that sellers have a magic number.
Right.
When they're selling a house, they've got a magic number that they've kind of predetermined, and all the back and forth with their listing agent. This is how much we want to sell the house for, and from that, I want to walk away with this much. Okay,
Right.
so those are the magic numbers. So if a seller says, 400 is that's my number, I've got to sell this house for $400,000, then a buyer could come in and make an offer for 412.
Yep.
If the seller wasn't offering any commission for buyer's agents as a part of their promotion, part of the agreement that they've all established and made, then in order to get for the buyer to get the buyer's agent's commission paid, they could offer 412 with a $12,000 payment for buyer's agency fee. If you wanted to go a step further, you could add 15,000 to that and go 427 and ask for 15,000 in closing costs plus $12,000 in buyer's agent commission. Technically, that won't exactly work on that because there's a limit to the amount of closing costs that's allowed on a 5% down conventional, but we're trying to keep things simple here.
Yep.
So you could go in, offer 427, 15,000 toward closing costs, $12,000 toward the buyer's agency commission. And the seller looks at that. If they're going to need some help from their listing agent, but that seller looks at that and says, that's my magic number, 400,000, right? Did I do a good job with that?
That's perfect. So here's what everybody goes, well, thanks, Zach. That's easy. We'll just write that up. So two things. First thing is I hear people all the time, and I want to debunk this real quick. I hear people all the time say, yeah, but I don't want to add $27,000 to my purchase price because my payment's going to shoot way up. Yes, of course your payment's going up, but let's define shoot way up. I literally heard that term over the weekend, and you kind of walk through the math and figure it out. Every $10,000 that you add on to a loan amount ends up being around $60-ish per month in principal and interest. So when you think about it, you go, well, wait, okay, 27,000 added. So it's 2.7 times 60. Well, that's going to come out to be about $155, $160 a month that it's higher. So if I bought the home for 400, but then paid 27 out of pocket, I'm paying 27 to only keep my payment 160-ish lower per month. Now, yeah, that's kind of the American dream. Just keep going into debt and then never pay anything off and just focus on monthly payments and not your balances. But if you do ask homeowners, a lot of them will say, no, because I'm getting in for the bare minimum at 5% down. I don't have the extra 27,000.
Right.
That's why I need to finance it. So it's only costing you, and I say only, but it's still in comparative terms, $160 a month is not bad when you're saving $27,000 in your pocket. So I want to make sure everybody's clear on that math. The biggest negative, and this is where it's going to get real tricky, the more and more these negotiations become popular, because sellers are going to get more educated on their risk too. They're at risk on some of this as well. And you think, well, how? Here it goes. What if the home only appraises for 400? Now you've got a seller.
Because our purchase price is 427. That's the contract price. So it has to match.
Yeah. And appraisers know what the list price was before you went under contract. They look up the property. They see the profile. They see everything. And they go, oh, this was a $400,000 house. And they're just padding it to cover all these extra costs and incentives and whatever. So okay, it's close. I can't justify 427. It was worth 400. Maybe I'll give you 405. That's really the best value I can give you. And Zach, that's where it's going to get interesting because an uneducated seller or a new seller, a one-time seller, first time, second time, maybe a newer agent who hasn't gone through as many of these types of deals and transactions, if they're smart, they're going to say two things. One, if you're if you're adding 12,000 for commission, the commission should be based a flat fee of 12,000, not 3%. Because if you add 12,000, well, you're paying 3% on the 400,000, but you're also paying 3% on the additional 12,000.
Right.
So it's not 3% anymore. You have to say flat number, 12 grand. That's one. But the second is if the appraisal comes in low, a buyer has the opportunity to just walk away from the deal altogether. Now the seller has put in, time, effort, energy, fixing things, repair requests, etc. They've taken the house off the market. They've marked it as contingent or pending on the MLS. All these things have happened. And now you've got a low value and you got a tug of war because you also have somebody who legit may not have the cash to make up the gap of the $22,000. Even if they want the house, they may not be able to. So that's one. A lot of times you're going to see people say, a house must appraise at a minimum of 400,000, meaning you're only partially getting the contingency if you're a buyer. Because if the home appraises for 400, well, you've agreed, and now you're still on the hook for the house and in danger of losing your earnest money. So those are some of the tricks and little things, the nuances that could start to cause some problems if this becomes more and more popular. And it's going to, it's inevitable that it will. And the hard part is you can't hide it because an appraiser knows what you're doing. So an appraiser now has to say, I know what you're doing, and I don't know if I'm comfortable or not with what you're doing because it's all legal, but I don't know if I can get you to the value you're wanting because we're just stacking stuff on top, on top, on top in order to make this whole thing work. But now we're running into, think about that, Zach. If you take a $400,000 house and bump it to 427, that's almost a 7% increase on the purchase price. Houses only go up right now 6% year over year. So you're trying to say that overnight it's up 7%? I mean, I'll shut up now and let you kind of give your take on it, but those are the consequences that you could see with this type of setup. And then you've got 2-3 weeks wasted and a lot of upset people because they're trying to stack costs in and they can't get there.
Right. So in summary, you can't just roll in endless amounts of money onto a mortgage loan because the house value has to support it. So here's one way that works in a certain type of market. I'm gonna challenge you a little bit and say you can hide it a little bit. So in a buyer's market, that means that the buyer has the advantage that houses are sitting on the market for a longer time, and the longer the house sits on the market, the more motivated a seller becomes and the more advantage a buyer gets, so they can negotiate that price a little bit. In a seller's market, the buyers are begging sellers to sell them the house, and we're seeing a really weird mix. I think it's probably in most places in the United States, certain houses are going right out of the blocks, multiple offers, over list, no concessions, and other houses are sitting on the market for longer periods of times, even up to several months. So in a balanced market or a market that's leaning a little bit toward the buyer's advantage, you could take that $400,000 situation and negotiate it down by 3 or 4%, because if you look way back historically over a long period of markets, and don't take this, the COVID craziness, you see that the typical negotiation off of list price is between 3 and 4%. So you could literally take, in our example, half of that money, let's say $15,000, negotiate that off of the list price in your mental mathematical calculations and say, okay, that's 385. Why don't we offer, we'll take 15 off of that and then add 12 to it, and we'll offer 397.
Yeah.
With 12,000 in closing costs.
Yeah.
Or 15,000 in closing costs in that example, or 15,000 in real estate commissions. So what happens is that seller, again, doing their magic number calculations, once all that's done and after it all washes out, they get good counsel about that. It's like 385. We're coming off of that, 3 or 4%. That seems reasonable. That's what our expectation was, or we hope to do better than that, but we've been sitting here for 3 or 4 weeks without an offer. Let's make that work. So our net is going to be 385, and then we pay commissions out of that and pay off our mortgage and go buy our new house because we're already under contract. That works for us. That is a way to hide part of it, which is to negotiate the price down a little bit and then add some to it so that you can help that seller. You got to help that seller get to their magic number. And that's all where we're trying to do, all the while trying to keep the appraiser from freaking out about this elevated value.
What's going to be interesting is the seller brain in these scenarios, because
it's a tough one, isn't it?
It is, because here's the thing, is that what you said earlier, we don't really, in my opinion, have a buyer's market or a seller's market. We're literally down the middle, in my opinion. I don't even
fall off the fence either way, literally, right?
Like, I don't even have a stat to prove it. That's how it feels to me. Like, that's the vibe I get. Like Zach said, I see agents post all the time that, house was staged correctly, repairs made, it was ready to go day one, looked amazing, was ready for a magazine. Boom, 3 offers on the first day. Boom, sold it before it even hit the market. It was coming soon. Then I see a similar house that's maybe like, Zach, if that one, it was a 10 out of 10, this is like an 8. But it'll sit for 3 months for no reason with 2 or 3 price drops, huge seller concession, things like that. And the problem that I'm seeing is that if sellers don't have to move, it's one of those like, golly, I'm giving up my 3% rate, but I do want to go ahead and move. And, we do want to do this or do that, or we do want to get out of debt, or we do want to move across town or something, bigger house, smaller house, whatever. I see the sellers at that point going, no, I know my house is worth it. I'm just going to wait. Like, I'm just going to hold on. I'm just going to sit back. I'm going to sit tight. And that's the hard part, is that some sellers are pricing their homes, and then they hear these stories and they read these things on Facebook, and they see the news, and they're like, oh no, I don't have to pay buyer's agents anymore. Remember, that's gone. And my house is great, and I'm not coming off of it. I for sure am not going to pay a buyer's agent plus choke up 12 grand in closing costs. So those kinds of mentalities, that's what's so weird about this market as well, is that you have some sellers who are just, their heels are dug in. You can't tell them anything. Then I've had 2 or 3 customers, 3 now. One of them chose a different path, but we had 2 that have closed where they went max seller concession. FHA paid 6% in closing costs. We're talking over 20 grand in closing costs, bought down the rate, did all these things because the seller was like, I got somewhere to go, or I got to sell this one because I want that one, or I'm in debt, or whatever. So a lot of this too is simply, which seller are you dealing with? Because the market is so divided right now. It's crazy that you can see that much of a contrast within the same cities, within the same zip code, where you can see one seller holding put, standing pat, and then another seller like, yeah, what do you need? Just make me an offer.
You might even see it in the same neighborhood. I mean,
Yeah.
literally in the same neighborhood.
Yeah. It's
Yeah.
crazy. So, those are things, we just wanted to make sure everybody understood, like, hey, these seller concessions, the real estate agent commission does not count towards a closing cost contribution. So please make sure you understand that. And what Zach alluded to earlier is, hey, there are caps on how much in closing costs a seller can pay for a buyer. Well, the real estate commission does not impede on that amount. You're
Right.
good to go. You just have to stay under the normal cap. But again, these are all individual buckets. The home still has to appraise. So you're going to potentially run into these issues with the values and the appraisals, but these are ways to make it work and to pay, if you don't have the money to come out of pocket. And you kind of hear a story here and there, but it's still too new, in my opinion, to have flooded the market with, boy, you should hear my story. Well, I had this buyer. Well, I had this. Well, I had
Yeah.
this. But I think slowly over the next year, and if rates do continue to trend down, you're going to have more activity. We're going to see more of these stories. Then, Zach, what happens? With rates trending down, are sellers going to be tightening their grip on the equity? Or a price is going to dip a little bit? Are they going to hold flat? I don't think they're going to swing down, but it's just going to cause even more headaches for appraisers, because
Yeah.
you've got such volatility going. Like,
Mhm.
what do you appraise it off of at that point?
Right. I think that it all requires a great deal of mindfulness. And so, what I would say is if you're a home buyer, then or a home seller, either one, you
Yeah.
really, really need to lean hard on your real estate agent to help you navigate these waters, because they're going to have the best grip on true comps. This is another thing that you didn't really talk about very much with sellers and the seller's mindset. A lot of sellers are still hung on that number of the highest price that anybody paid in the neighborhood back in 2022.
Yeah.
I know in my neighborhood, I know exactly what that number was, because everybody was like, "Duh, what
Some
happened?"
crazy numbers,
And
man. Crazy.
crazy, and that's not an indicator of value. So you need to lean hard on your real estate agent, whether you're a buyer or a seller, because they're going to have the best bead on what that the comps are going to support on the value of that house, and then negotiate accordingly. So really lean hard. And if you're a real estate agent who is feeling a little bit kind of like a lost ball in the high weeds about all of this and how this math works back and forth and how you take care of both of those things, don't hesitate to reach out to one of us, because we can help you navigate those waters and work your way through that and better define these buckets. This is the whole thing. Going back to my first conversation with a managing broker about this lawsuit, it's going to require a new level of communication. We have to be more expert communicators about the specific details of a transaction than we've ever been before, where there is a question about who's paying the buyer's agent commission.
Yeah.
We just have to be better about it, and we can't be scared of talking about big dollar numbers and who's going to pay that and where it's going to shift and how we're going to make both the buyer and the seller hit their magic numbers, make some adjustments, make some concessions, find that extra $147 a month. If I roll all this in and it all goes right and we hold our mouth right and the appraisal comes in and we close, I got to find an extra $147 a month. So who's giving up their Starbucks and who's giving up their cheeseburgers, and we're going to do in house movie night instead of going out and buying the $9 popcorn bucket. You can work all these things out, because this is a house big investment, and if you're moving, you're doing that for very important reasons about lifestyle and family and memories and culture and schools and whatever. So everything is figure outable. One of my favorite quotes: everything is figure outable.
When's the last time you went to a movie theater?
You don't want to ask me that question. I used to be a big fan of I loved going to movies back
Me
in my
too.
20s,
Yeah.
absolutely loved going to movies.
Same.
I have not been in a movie theater, man. I it's embarrassing because I have a young daughter who goes. She was at the movies Friday night. I haven't been
Yeah.
in a movie theater in 6, 7, 8 years. I don't know. I avoid it
Yeah.
like the plague. I avoid it
So
like it was like it was about March or April of 2020. That's how I avoid it.
not not to get off track, but you say that, and I thought, man, that would be such a good like random show or podcast for somebody talking about things that in my vibe or brain or circle feel like it completely died with COVID because I
Yeah,
think since COVID, I've been to the movies, I think twice. I want to say, I remember in 2019, Disney had a run and I went like almost every other weekend because Toy Story 4 came out,
yeah,
Aladdin came out, Dumbo came out. Like Disney had a summer of 2019 where it was
right.
just like bam, bam, bam. Like they just hit everything. Lion King, I think maybe was somewhere in there, the real life one or the animated life one, whatever you call it. But when it comes to since COVID, I I took my boys to see Super Mario Brothers. I remember that one
Okay.
specifically.
Yep.
But we went at like 2 o'clock in the afternoon. It was one of those picked them up from school and surprised
Right.
them, go to the theater. But Brittany took them recently. I didn't go. And I remember her saying, like, for the four of them to go to the theater and to get a few drinks and the popcorn and like one treat or $140, something like that. So you just talk about cutting back expenses, and now people go, "Man, I can't believe you paid $30 for that to stream that on your TV or something." Like, it costs 140 to go to the theater.
Right.
I could
Right.
stream 4 movies over here, they're in theaters, but you can still, like, stream
Yeah.
them at home because 'cause they've been out for 2 weeks or 4 weeks or whatever. Anyway, sorry for the tangent, but you're right on the sellers and the buyers and who's gonna do this and who's gonna do that, and remember how people said, "Oh, this NAR lawsuit is gonna drive prices down?" I I never thought that for 1 minute because a seller is going to say, "Not my problem." And just because we don't have a buyer's agent involved anymore getting a commission, or maybe they're involved, but I don't have to pay them. Well, I'm not lowering my price by 3%. A
Mm-mm.
seller's looking at it going, I'm keeping my price up here. I'm going to try to keep that 3% for myself. Whoever said that prices were going to go down, that was that one just seemed like a basic. What are you talking about? You're
Right.
nuts. Like sellers are going to remain as greedy as possible, which they should. You should get the most you can for your house, depending
Yep.
on what your goal is,
Yep.
and that would be how fast you want to sell it. I mean that's what it comes down to. So
And just on that note, I was, I do this math all the time, and I'm such a proponent of home ownership, and I've been barking it like from the rooftop. If you don't own a house, you need to get in and do it. I don't care what you buy, you need to buy because that part of the American dream really is slipping away. Affordability has left the station for a lot of people. And I was listening to one of my subscription services this morning talking about home values, and they had a $500,000 example, and they were talking about at this at the current appreciation rate, it'll appreciate at $23,750 a year. And I was like, yeah, that's at 6% it does this, and at 4% blah 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 blah. But
yeah,
they got that out to that 5-year mark, and part of this is that I've got a client this weekend who's coming in and applying and wanting to upgrade to a new house, and at 5 years it was over $100,000. I'm like, now you're getting into some significant coinage. And then I thought about my clients, like that's where they got this great big old giant down payment is they bought 4 or 5 years ago, and they're just living in their house, just kind of doing their thing. And
yeah.
it's an amazing time for a lot of reasons in America. But boy, that home ownership thing, it really has become a passion of mine for first time buyers just to get in. It's not really,
Just
I
getting
don't
in
know.
the game, man.
I've got an odd passion about first time home buyers because
Same.
it's built around urgency and getting in the club.
Yeah.
The club is formed. I hate that the club is formed. I despise the idea that there's a haves and have nots,
Yeah.
but it's very clear in real estate in America. And I want you to have.
Yeah. I posted this question the other day on Facebook, and a few people are idiots and took it the wrong way, because social media keyboard warriors. Um, it was about if the feds do cut rates a week from now, a little over a week from when this is being recorded.
No.
Mortgage rates and Fed rates are two completely different things. Just please understand that. But as Zach and I have talked about, in this cycle, the Fed rate does have a very, very direct correlation with mortgage rates.
Right.
It has an extreme parallel with mortgage rates. So that's why people with mortgage rates are so focused on what the Fed is doing. Normally you wouldn't hear, but it's been built up and built up and built up. And now everybody's waiting on the Fed to do their thing. And my question was, if the Fed's, they've already decided they're cutting it 25 bips, but what if they cut it 50 bips? What if they do 2 to 3 cuts this year? Really, the bigger question is not how many cuts, but how many basis points do they cut this year? And if they do cut, then rates go down. And let's just say a 30-year fix now, the average drops down into the fives. Right now it's in the low sixes. What if it gets down into the fives on an average? Then what does that do to house prices? And this is to comment on Zach's affordability position. So if rates come down, people keep saying, well, I've been waiting on rates to come down. And all these stupid math people talking about, oh, if rates drop, 23 billion people re-enter the housing market, all these stupid claims. But if they do go down, okay, now you have more people who can afford a home. But houses are going up 6% year over year right now when rates are high. So if house prices do go up, then now you've got lower rates, but you got higher house prices. Now, let me tell you, the lower rate has a more direct impact to your payment than a higher house price does. Rates have a bigger influence on monthly payment than house price. But if the house price does go up too much, are we not back to square one on affordability? We just have lower rates, but now we got higher prices.
Yeah.
And so that's,
Yeah.
and when we don't know the answer because we have no idea how the markets will react. And to be honest, nobody knows because we've been playing this guessing game for now over 2 years, as to what's going to happen when rates fall. But it seems like we're actually on the verge of finding out our answer to the long question that we've all been waiting on. So I don't know. We'll see, but I'm with you on affordability. I just look at it and I go, man, affordability may get lost in all this because you may end up with the lower rates, and still have a problem. So,
well, and if you think about it mathematically too, Chad, people with lower loan amounts, lower rates aren't even going to equal what a home price appreciation. If you're buying a $400,000 house and you've got a $200,000 mortgage on it because you got a big down payment,
yeah,
interest rates can go down a lot without shifting your payment very much. But you add 6% appreciation to that $400,000 house, you're actually losing money by waiting in that scenario. I'm going to wait for lower rates because I want a lower payment, but your house price has appreciated so much that it exceeds what you could have saved in a lower rate. So
here's a
again,
fact.
it's
Here's a
math is
fact.
hard.
People who waited have missed out. They have lost money on an average. I'm not saying somebody didn't get a deal and then 2 years ago and today they're, looking, smelling like a rose. On an average, people who waited have lost. The flip side to that coin is that by waiting, did they avoid a bigger financial disaster for their family, meaning people who bought and couldn't really afford, but they remember the whole marry the house, date the rate.
Yeah. Yeah.
Well, you've been dating for 2 years, and all of a sudden you got the crazy ex-boyfriend or girlfriend that won't go away, and now you're in a bind until the rates get down to where you're more comfortable. So, but as far as losing money, people who have waited have lost, because it's statistically proven 6% appreciation year over year. So you have lost money at that point. But
Yeah.
we'll see. I mean, this could be a 4-hour show, just kind of going back and forth on this topic, these topics, building it in, appreciation, when to buy, what's going to happen with the market. And we got other things to do. But it's going to just, we'll see. The last quarter of 2024, I literally have no idea what's going to happen between the feds and the election and the economy and the jobs. And quite frankly, to say it brutally honest, the lies about the jobs. When you just if you threw all of that into a giant bowl and hit the cake mixer on it, like, you have no idea what's coming out. This is going to be, in my opinion, a quarter like something we've never seen before, because nobody has a gauge on it. Literally nobody knows.
Yeah, I
And
believe that we're living in a shift in history right now,
we could be.
in a number of different ways. So
Yeah.
I'm just thinking about the 25 versus 50 bip cut next week. That's on September the 18th, is 8 days from now, and literally 5 days ago, the advantage was to a 50 bip cut,
Yeah.
and today it's now 2-1 for a 25 bip cut.
Yeah.
That's the
Well, it's because unemployment went down.
Those are the survey numbers, and then it's absolute it's lunacy. I don't know if you. Well, we'll talk about that later.
That's the best way to put it. We'll talk about that later, because you just can't make some of this stuff up. The revisions and the revisions and that's my favorite word of this year, revision. Because
revision. You remember when the politicians were all getting outed for misspeaking? I misspoke, which was code for lying. Now we've revised misspeaking to revisions.
Yes.
A revision of a revision.
I'll die on this hill. There's nobody who could be, if any normal average American working at a corporation was as bad at reporting as what the federal government has been over the last 12 to 18 months, they would absolutely be fired. They would be thrown out. They would probably go to trial for some sort of conspiracy or collusion or something to do with damaging the company, because it's so bad at how poorly the numbers are reported and presented. And then it's later on, it's almost as if they went to the board and reported numbers, and then in the coffee break room they did a revision and it just kind of leaked out and got passed around the office, and that was about it. So
visions of Enron, if you're old enough to remember that.
I'm barely old enough to remember how that was going. My Enron connection is, they used to be the stadium name for the Houston Astros. So that's how I know Enron. Yeah, that's about it.
I had a closer personal connection with Enron, so it's very sharp in my brain.
I unfortunately for you, I don't think it probably ended well for you. So I'm sorry.
It was a friend. I wasn't. It was
not you. Okay, got it.
It was a friend relationship. So and to my knowledge, I didn't have anything invested in Enron, but who knows? Those were bad times, but that's what you get when you cook the books.
All right. We're way over our normal time, but this is a big one, so we wanted to try to explain it. And then I know we got off on some different details, but all of this is true, actually happening, live, present day, current events. So a little longer episode, but this one's a good one. I hope you got something from it. But if you have questions, reach out to us on these socials above: YouTube, Instagram, Facebook. My info right here below. Zach's over here in the bottom left corner of his window. Check us out. Drop a comment, like, subscribe, comment. Please follow, share with your friends. It helps us. It helps the channel. We truly appreciate it. Appreciate you. 41 episodes in the books, and we'll be back next week with number 42. It's Fed week next week. So I'm sure we'll have plenty to say when that rolls around here in just a few short days. So have a great rest of your week, and we'll talk to you soon.
See you next time.